What's up, everybody? Michael Silva here to do some technical analysis on multiple indexes. This was originally going to just be the S&P 500 today, but I changed it up last second just to try out this market brief idea that we previously discussed. So in today's video, I'm going to have timestamps in the comment section below, and then I'm also going to have it in the description as well. Today we're going to be looking at the SPX on the daily and the 30-minute time frame. We're going to be looking at the VIX. We're going to be looking at the Dow Jones. We're going to be looking at the Nasdaq 100. We're going to be looking at put calls. We're going to be looking at multiple different things today, the 10-year bond, the dollar. So if you want to zoom or move around to any particular point in this, there's going to be, like I said, the timestamps below. But with all that said, this is just a trial run of the market brief. I do these videos Monday through Friday of just typically the S&P 500. If you guys have any ideas for me, leave them in the comment section below. Let me know how it goes. Let's hop into this right now. The market closing at $3,580.84. This is the 12-year trend line and the megaphone pattern that we can mapping out. So we have a lot of converging lines going on the daily time frame. When I brought out the Fibonacci extension levels yesterday, we checked it from this point being A, then B to C right here. And if I throw that back up and zoom in, what's going on? Well, we had a rocket ship type of day today. So we've gotten squeezed above the trend line. Not really surprised there. We closed above the 50% on this fib extension level, and we're kind of moving into that zone, that 3,600 to 3,650 zone that we kind of mapped out for a potential short opportunity. This is a very, very obviously aggressive move. And what's probably taking place on this run up right now is not only was there a lot of fear over here when we're running into the all-time market high, we probably triggered a lot of stop losses. We're seeing somewhat of a blow off top potentially. And there's probably a lot of quote unquote fear. Obviously, this is a lot of greed pushing the market higher, but a lot of people that maybe have stepped out of the market might be thinking to reconsider and hop back in. So there could be a lot more money coming in from the sidelines. When we look at like the CBOE, actually, let me just pull that up right now. So this is the CBOE options equity put call ratio. You can look at this on stockcharts.com at CPCE as the ticker. And you can see right here, it's at 0.40. That's pretty much a historic low for this. So everyone is basically long the stock market as of this particular time. Here's a tweet from Sentiment Trader. If you don't follow them, they throw out some really nice stuff too. But what they're showing here is options trading reaching equivalent to the 12% of the NYSE volume last week. So a lot of option calls coming into the market, producing a lot of volume for the overall market. So very, very bubble-ish territory right here, rocking the markets higher. Be very careful with these type of moves. So we're back here at the SPX. Yeah, like I said, this is the trend line for the megaphone pattern. Not really too surprised that it blew above it, but it's still coming into a lot of different areas of resistance. So we got to watch this zone right up here and play it day by day. Don't start, if you've already removed out of a position or you missed this kind of blow off right here, this just big rocket ship, don't feel like you're missing out at this particular point in time. It's very likely that the market will have some volatility pick up and you'll see a pullback and you could get in a long position at a better time frame. My personal opinion is that 3,400, this green line right there, that's what I'm looking for, but it could very well fall even lower. So make sure that you're still monitoring your risk. Right now, there's more, there's less upside potential, at least from the looks of a charting perspective, less upside potential than there is to the downside, which would mean that there's more risk involved in getting long right now versus potentially holding back and waiting for a specific pullback. So yeah, just amazing pickup here in these last few trading days. Great start to September for the longs position. Donald Trump tweeted out today, the Dow Jones Industrial Average just closed above 29,000. You're so lucky to have me as your president. With Joe Biden, it would crash. Pretty funny there, especially before he was actually elected president. He was talking about how this was the biggest bubble in history, and yet we're pressing higher and higher. Ultimately, this is not a good thing for the stock market to have these parabolic moves to the upside, but it is what it is, and that's just how the cookie crumbles. Our RSI indicator, we are now printing, this is amazing, 82.94 on the daily time frame. On the weekly time frame, we're basically hitting the overextension area, but we're not quite to this type of level. So if we do get a push higher for the weekly candle, we might very well get into that overextended territory on this oscillator itself. Let's just pull up the weekly time frame right now. So here we go, 6 straight weeks in a row, 1, 2, 3, 4, 5, 6 straight weeks in a row heading higher. Now, remember what I said in the previous videos about potentially us getting way extended over and potentially creating a long upper wick. So today is, what is today? Today is Wednesday. We still have 2 more trading days left, so it might not technically happen this week, but that would be pretty crazy to see it reach up into this zone, the 3,600 to 3,433, come into there, and then just a big pullback on Friday would make this look like one of those shooting star type candles. And then we could start potentially talking about a short position. But I would say if we do reach into here in the next few days, I wouldn't mind putting a short trade on and then having a stop loss above this. Because if we move higher past the 618, we can definitely see the squeeze continue. So if you're not familiar with shorting the markets or using puts to hedge long positions, just refrain from doing that kind of stuff. All right, so yeah, we are back here on the daily time frame. Very, very overextended move. Look for this area to get kind of the price action to come right in here, and then that's when I would start considering, hey, we might be seeing a little bit of a pullback from that point. My ideal pullback is 3,400, but it could be very likely we come into this area and maybe just come test this trend line again, and then we might make a new high, and that could create a potential pullback here, like so, and then we might move higher on the price action, but we might only move up to here on the RSI, creating another negative divergence where we would have a low high here to a higher high, and then a high high here to a lower high. So there's so many different scenarios that can pan out, and you just kind of need to be prepared, buckle up, because these type of moves, they don't last. Although, you know, if you are long right now, you want them to last, and if you're a bear right now, you're probably wrapping your head around this like, what the heck is going on? Here's the VIX right now, falling wedge, still broke above it. We're seeing some upwards momentum. Gap is still down here to 18.1. Can it get filled? I still think it's very possible. It scares me a little bit because that would make me ultimately think that the market is going to be heading higher before it goes down. But it's really anybody's game. We're still seeing the volatility kind of increase a little bit while the market's going up. So this is kind of a cause for concern. Something's brewing underneath the surface of all of this. I don't know what it is. I'm not smart enough to know what it is, but I am smart enough to know from a charting perspective, things are very, 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 very skewed. There's plenty of warning signs out there saying, hey, you should probably be holding some cash on the sidelines right now. Speaking of cash, the dollar index, the DXY here had a hammer candle the other day, and we're kind of seeing a little bit of an uptick. So we were in oversold territory, right? We broke down from this trend line, starting to move a little bit lower. Now we're kind of seeing a little uptick taking place. So this very well may be some sort of consolidation taking place, or maybe a falling wedge or a down channel. I mean, it just depends on how you want to look at this. But really what's going on is we had this huge steep sell-off right here. It kind of bounced. We've been trading within this channel right here, and now we have a hammer candle moving to the upside. So if we break above this upper trend line right here, this could be very well a base for the dollar to potentially break out and move higher. And if we see the dollar move higher, I think that's going to put a lot more pressure on the S&P 500. Here's a chart of the daily time frame for the 10-year bond. We saw the breakdown to 0.5, and this is where I was kind of saying once we saw a breakdown from this could show some very scary things for the stock market. We were pulling up a chart about the 10-year minus the 2-year constant maturity rate measured with the S&P 500, and it looked like an alligator mouth, and basically it looked like it could potentially, when it clamps down, you see bonds go up, S&P 500 go down. However, we needed it to stay below 0.60, and it did not. So it came down, it looked very bearish, but then we got the breakout to the upside, created a little bit of a bull flag, broke out of that. In the last 4 trading days, there's been a lot of pressure on these 10-year bonds. So this might just be some consolidation taking place before a potential move higher, but we're going to have to just monitor this one as well. And I'll talk about it on other videos here in the near future. Here is the Dow Jones. Recently broke out of a nice little bull flag. I had mentioned that previously from a bullish perspective on previous videos, but we're kind of seeing it consolidate, and then we saw this big run today. That actually closed the gap that's been sitting around here. So it really does look like the Dow Jones is headed for an all-time record high. To be quite honest, I wouldn't be surprised to see it come up to 30,000. It would make sense given what's currently going on in all the other indexes. Here's the Nasdaq 100 printing another all-time record high, closing at 12,420. Absolutely incredible. Now, I used to have this as a wedge, but clearly it's more of a channel than everything, a pretty gigantic up channel. Printing an RSI number at just above 80, 80.78, very overextended, but I also want to point out how the monthly time frame looks on this, because it's just goes to show you how insane this market actually is. So if I pull up the monthly time frame, and no, I'm not going to just show you these 1, 2, 3, 4, 5, 6 gigantic green candles. What I want to do is show you the Bollinger Bands. So I'm going to go ahead and remove this extension. Before I actually move the extension, the 1.618 level, that is actually a big number to watch. So if we get an extended move up to 1.618, I'd be very hesitant there. If you have long positions, I'd consider hedging those, or potentially selling off or taking some of your profits from that point, because that would put it at around 13,000 for the NDX. And I would imagine that there'll be either some consolidation or just a complete rejection. So we'll see about that. But I want to pull up the Bollinger Bands. All right, so here are the Bollinger Bands. Now, the reason why I'm showing you this is because there's a complete disconnect from the monthly Bollinger Band. So very overextended for one, and there's a disconnect. Try looking back through the history of these charts to look for some sort of disconnect. I tried doing it, but really what happens is typically when it gets overextended, it's always connected in some sort of way. So yeah, it gets outside of the Bollinger Bands and then you see some sort of pullback, but it's typically always connected because that's how the market moves. So I'm just still looking here. These ones almost look like they came out from the downside, but it still managed to touch it and they pressed within it. So I literally kept on going back. Here's year 2000. So this is the tech boom. Look at this run up, right? So even at this run up, we really had it overextended, some big green candles like so, but there was no disconnect. There was not a time where the candle was above the Bollinger Bands. It's absolute insanity at its finest. So this one kind of down here looks like it may have. Nope, it was still connected. So let's head back to today, just so I can show, yes, the RSI is very overextended, and that's on a monthly time frame. And then we have the monthly Bollinger Band overextension too as well. So holy moly, the NDX, it's looking pretty crazy right now, very bubble territory. That 13,000 or just below that on the Fibonacci extension level looks like an area of resistance you want to keep an eye out for. Here is IWM, iShares Trust. This is a small cap, the Russell 2000 ETF. And clearly there is not a recovery fully in the small caps as we're seeing in the other main indexes. But what I want to point out is there's potential opportunity, I guess, for upside in the small caps. So if you take a look at the small caps, it's kind of forming what the Dow Jones did, where it kind of created a bull flag. So we're kind of seeing that, and it might be potentially breaking out to the upside right now. So keep an eye out on the small caps. I would say keep an eye on this area of resistance, 166.26. That looks like it could potentially be some resistance. That's that gap that we saw in the other indexes as well. So that's the small caps, not much going on there, but you know, something. Here's the SPX on the 30-minute time frame in overextended territory within the RSI reading. We had that gap and go pretty much straight up today. So is there any trade plans that I see? Well, from a long perspective, I would say watch the dip and then buy into that, have a tight stop loss, because you don't want this thing to just completely turn around on you. You have the 50 period sloping up. As far as resistance goes, we have 3,600, and then we also have this right here at 35.88, creating kind of a reversal type looking candle. So if we do get a pullback going into tomorrow, look for areas of support. Areas of support would be something like 35.68 right here, simply because we had resistance, and then when it broke out, we really saw that breakout to the upside. So you can potentially play a bounce from that point to the upside, pulls back, have a tight stop loss, and see if you can count some profits there. Another one to keep an eye on is really, I think right around this level would make sense. 35.55, let's call it. And as you can see there, we had some resistance right out of the gate in the first hour and a half of trading. The pullback happened, and then we ran to break through that level. This also is another area, 35.38 down to 35.34, or you can just watch this trend line. The trend line can act as obviously an area of support. And then you also have the gap that took place from 35.28. So this zone down here could be a very good potential buy the dip scenario. So if we see it pull back into this range right here could be a good buy the dip. The 50 period is probably going to be sloping up at that particular time. Then you can have a stop loss underneath the 50 and then watch that thing run if it continues, if people continue to buy the dip. That's all I have for you on this market brief. Let me know your thoughts of how this went. I would originally just started this off being an S&P 500 video, but then I was like, you know what? I'm just going to bring in a couple other elements and just kind of see how it goes. So let me know in the comment section if you like this kind of stuff, and I'll add to it. I'll hone it up. I'll make it better, at least as best as I can. So thank you guys for watching, and I will see you back tomorrow.